We had some earnings here today from some retailers. I'm going to call out Kohl's, big department store. The numbers, they missed on EPS. They came in line with revenues, but their guidance was really weaker than expected. The stock is down 22.5% today. A real disappointment, down at a 52-week low, so really taking it on the chin. Let's get the latest. Mary Ross Gilbert, she's a senior equity analyst covering the retail space for Bloomberg Intelligence. She is based in our Los Angeles, California office. Mary, what did you hear from Kohl's here, particularly about their guidance coming in weaker than expected?
Yes, Paul. So with regard to Kohl's guidance, first of all, I think they're really hoping to beat the numbers, but they're expecting their comp sales to be down 5 to 7% in this coming year. And if you look at the performance in the fourth quarter, their revenues came in sort of in line, fairly close. Their comp sales were down about 6.7%. But when you look at what's going on, the Sephora business was up 13% on a comp basis. That means that the rest of their categories, and they're mostly apparel related, were down double digits. So it's very concerning because that Sephora business, since they brought it in, is now $1.8 billion in annual revenues. Meanwhile, they lost about $3 billion in revenues, and now we're looking for further declines this year. So that's what's really concerning. Now we have a new CEO. This is the third CEO in 4 years, Ashley Buchanan. And, you know, he gave a quick peek at what he sees are the opportunities. They need to really get their merchandise assortments right. They did bring back in private label, jewelry, and petites, because those were some of the things that they took out when they brought in some new brands. And they found that they were alienating their core customer. Another issue was on the promotional side. They always have these great little coupons, but what they did was they had raised the number of brands that were excluded from the promotions to an all-time high in 2024. Their objective is to reduce that to make it more compelling. So they have a number of strategies that they have to employ here, and it's going to take time. So that's why the outlook for this year looks dismal, along with the fact that the consumer climate, particularly for their low-income cohort, are challenged by still high inflation and just an uncertain environment with the ramifications of higher tariffs.
Among the many things that jumped out to me is why they're bringing back fine jewelry. How do you square that with a struggling consumer base? They're not the latest retailer to cast doubt on the strength of the U.S. consumer.
Yes, Isabel. So it's a good point, but it's important that you have that for a gifting option. And these items are not, it includes not just fine jewelry, but also costume jewelry. And that category, because they did bring it back in, their sales were flat in the jewelry category. So that was, or accessories category was flat. So that shows that strategy of bringing it back, because it's very important for gifting. And once again, if you look at the promotions that they offer, I was just in a store yesterday. For jewelry, they have buy one item, get the second item like half off or something like that. So they do have some compelling value that they're bringing the consumer there. It's important for gifting. So for example, for Valentine's Day, and then also, you know, for the holidays.
What are they saying, Mary, about tariffs and their ability to pass along price increases or conversely take it in their margin?
Yeah, so tariffs, it wasn't a huge topic on their call today. And if you look at the past, they weren't really impacted. They were able to pass it on. And I think what they do is they work with their vendors. And they source, so if you look at their private/exclusive labels, that business, they're able to, you know, they haven't disclosed exactly how much they source from China, but they're able to basically work with their vendors on you know, creating that the product at a price point that fits into their value equation. And so the last time around, if you looked at 2018, 2019, they really didn't call out a specific impact related to tariffs. They said that they were okay. They were able to offset it with either cost savings or just the way that they were able to price it in, you know, in terms of building the margin.
How about store visits? Kohl's isn't the only one struggling with that. I myself have just shopped basically online. How are they attempting to attract customers back in store?
Yeah, so Isabel, actually their stores performed better. Now remember, they were, the sales were down, but they outperformed online. So, earlier in the year, we had seen where online did better than in-store, but actually, the stores are doing better than online. So they're actually, and we're seeing that from a number of retailers where we do see really good performance in-store. And if you look at off-price, I mean, that's really based and built on in-store visits.
Right, right.
And that's when you look at who their competition is, and where they're losing share, they're probably losing it to off-price.
All right, Mary, appreciate it so much. Mary Ross Gilbert, she's a senior equity analyst covering the retail space for Bloomberg Intelligence.